Hello and welcome to today's video. In today's video, we're going straight to understand the concept of fair value gaps and imbalances. And we'll be learning this under the series of technical analysis and the sub-series of points of interest. So this point of interest 5. This video is brought to you by Pips like X, and our WhatsApp number is +2348055369615. And I, Investor Tio, will be your host for today. Before we get started, we have a Telegram community where we drop set up for traders and traders alike. So don't worry to join our Telegram community via the link in the description and our Twitter handle for more setups. Yes, so today's video is focusing more on fair value gaps and imbalances on our YouTube community. So if you are still here, don't hit that subscribe button and turn on notification bell so you don't miss out on trading setups, and turn on notification bell so you don't miss out on trading tutorial videos when we drop them over here. When you're done with the video and you gain value, go to like, and you want to help others, share with them too. So this is fair value gaps and imbalances. Now, what should come to your mind when you hear about fair value gaps? So let me use this text one right here. What should come to your mind when you hear about fair value gaps? You should just know that it's a theory candle formation. All right, this is the first thing that should come to your mind. It's a theory candle formation. I'm not talking about fair value gaps without observing that it's a theory candle formation. Let me reduce the size. Yes, first thing that should come to your mind is that fair value gap is a theory candle formation. Now, once the theory candle formation comes to your mind, the next thing you should be thinking about fair value gap is the fact that the fair value gap is an inefficiency in markets. All right, it's an inefficiency, or you can say there are inefficiencies in the market. So this is an inefficiency in the markets. So I'll continue typing soon, but let me explain this for you to get properly before we continue types. Now, fair value gap is a theory candle formation. There are inefficiencies in the market that occur when the markets or the market exchange, let's use that word, receives too many of one kind of order, whether it's a buy order or a sell order, and not enough of the other. So let me get this straight. Okay. Whenever the market receives many buy orders, like a lot of buy orders, a fair value gap occurs. Like the market is just booming up, booming up, booming up, right? Because of many buy orders. Remember, orders are formed from an order block. Another block is a block that has many orders. So these are source candle for order block normally, right? So in this source candle, using this buy example, let me take it up. Okay, this is a buy example, and this is a sell example. Using this buy example, all right. In our source candle, several buy orders were here, so you can see the candles just keep on booming up, booming up, booming up because they're buying. So a fair value gap is formed when there are many buy orders. Like the sell orders are never enough, so it just keeps on pumping up. That there's an impulsive move, right? And when this impulsive move occur, there's usually a gap that's left behind by a three candle formation, all right, which the market will come back to fill because this is an inefficiency in the market. So this is a better example used to explain it. So let me get this straight for you. Okay, there's a saying among traders that for every seller there must be a buyer, and for every buyer there must be a seller. You get? So when traders execute heavily in just one direction, many people are buying. It means nobody's selling, right? Like we don't have more sellers. So since many people bought, there will definitely be a gap, right? And this is where the imbalance is created. And guess what? Price usually comes back to fill these imbalances, hence giving us opportunity to trade. So we're not using other block in this video. We are concentrating on fair value gaps in this video. Now, if you want to get a more in-depth definition, you can talk about fair value gaps as the imbalances formed via three candles formation when there is a gap between the wicks of the low of the first candle and the high of the third candle in a bearish fair value gap. This is the wick of the low of the first candle. This is the third candle, 1, 2, 3. This is the high of the third candle wick. Okay, so this gap over here is what's referred to as the fair value gap. This gap over here. Right. So same thing over here, but this time around the definition in, when you're using English, but English doesn't really matter here. What matters is you're making money. But yes, using English, the difference between the high of the first week, all right, and the low of the third candle's wick. Okay, so this is how you can clearly see it for a bullish fair value gap. Now, how to mark out your fair value gap? There are several ways of marking out your fair value gap. So let me erase these markings I've done. Let me delete them so I can explain how to mark out your fair value gap straightforward. All right. Now, some people mark out a fair value gap with the rectangle tool, the same tool that we use for other block. Remember this rectangle tool, this tool. Let me bring this up, this tool. Right, rectangle. Some people use it. Okay, and this is how you mark it. You come over to your fair value gap, this candle with fair value gap where it started, and pick up the spacing, right? Mark only the space in between them. This is the gap. This is the gap between the first and third. This is the gap, right? So this is how you just mark out the fair value gap. It seems to have extended this. So let me delete it and create it again so you can get what I'm saying, right? So this once again is the gap between the first and the third. Settings, extend right off. Okay. All right. So this is definitely this. You get the point. So the same thing over here for bullish fair value gap. You can mark it starting from here and covering this gap. You can mark it this way. This is a clear way of marking it. But I don't want to confuse myself with other blocks markings and fair value gap markings. So I don't use this to mark my fair value gaps. All right. There's another way you can mark out fair value gap, which is using the trend line tool. This trend line tool. Click on it. The shift button will come in here. So first and foremost, you click on the week. This is the beginning of the week. Then hold your shift button. So it forms a straight line. If you don't hold your shift button, it will move like this. But when you hold your shift button, it forms a straight line. And then you mark it out. You go again for the next, okay, from the week, the extreme of the week, hold your shift button and mark it out. I usually color the trend lines with black, but anything you want to do depends on you. Market is something you can work with, okay? You can make your own decisions around it. This is literally how I will mark it out here. For this aspect here, it's still the same way. You just mark it from here, draw it out, hold your shift button so I can stable. Once again, draw it out, hold your shift button so I can stable. If you're using a mobile device, trading views available on mobile device. You just need to align your tools and make sure the lines go straight since you don't have shifts for you to do well there. Right, so we've marked out with these two. Now, there's also another method that you can use to mark out the favorite gap, and that's using the way to. The way to just keep on drawing lines till the end of the word, right? Well, from the point you started. So this is the way to, horizontal way to. Click on it, you pick the points, and voila, it keeps on drawing lines, right? It draws it to the current position of price. Remember, for trade line, I could maneuver it the way that it stops before this coin price, but this I can't maneuver it. Just keep on drawing from this point downwards. So if you want color it blue, leave it blue. If you want color it black, leave it black. Depends on you, but I use black. But I don't even use it like that in my charts. Right? Black is just to make sure everything blends properly and looks nice. Oh yeah, this is it. Horizontal way to. So basically, these are ways you can mark up your fair value gaps on your charts. So I hope you understand that it's really, really okay to trade fair value gap, but it's not nice to trade them alone. Just like any other concept in trading, you don't just trade all the other blocks alone, just like that. You merge it with something, right? You can trade other blocks with inducements, which we're going to be learning in future videos. For those of us that are already subscribed and have the notification bell turned on, you can also trade fair value gaps, but not just alone. You can trade fair value gaps with other concepts. You can even mix the fair value gap concept with the RTO concept, which we're going to be learning in the next video. That's the video I'll drop in tomorrow. All right. So there are various ways you can trade the fair value gap. Okay. So just for you to understand what the structure is about and how to maximize your gains by adding it up properly. There are several setups that can be dropped with favorite gap. So definitely go to join our Telegram community where we drop setups. So you can see setups and how we analyze them. But majority of my setups work with inducement and other blocks. But favorite gaps, I've backtested it in market and seen that they actually work when using confluence with RTOs and the likes. All right. So basically, we understand how this bearish favorite gap plays out and how this bullish favorite gap plays out. And what I need to explain is how you can even trade with it. Okay. How you can trade it. This is favorite gap, right? This is favorite gap. Let me draw it out again. Yeah, so that's one, and this second one. How can you trade with fair value gap? Now you understand the principle. So for this bearish fair value gap, how you trade with it? When you see this bearish fair value gap, we expect the market to come back to this gap. All right. When the market comes back to this gap, what do we do from here? We take our sell to our position to and short the market. So this is what we do here. Where is our position? This short to. Take the market. When you expect the market to get back here, I don't usually wait till get there. I will just take myself from here. My stop loss above the fair value gap, my TP nearest liquidity. This is the one we should remove. Some people work with one we should remove, but I usually work with one we should four and above, depending on the area of liquidity in the market. So you get the point. Target from liquidity to liquidity. Same thing for this buy example over here. Okay, you can mark out your fair value gap like I've already shown you. Mark it out here too. That's basic as that. Then you expect the market to come back to this zone, right? So retrace back to retrace to this zone, and then you enter for your buy position, targeting future price movements, targeting upward movements. All right. So when you do this, you just use a long tool. You have placed your painting limit orders over here. That you want to work painting orders, but you want to work with market execution. It's a personal decision, right? But I work with painting orders mainly. Then you target your 1:4 and above. All right. The reason I target 1:4 is called probability games in trading. So you can just understand how you trade and how your setup plays out. So this is it's as simple as this. Fair value gap explained in a short period of time for you to understand. But I want to do a live example so that those of us that are staying with me up to now will see how it plays out on the chart. So let me go to the chart. Okay, so I can show you live example. A live example. Okay, this is real-time chart on Win USDT. This Win USDT, I missed this entry because I think I was asleep. I was about to sleep, and yeah, I told myself I'll place buy limits position. I didn't place buy limits. So yeah, market's already going up, leaving me behind. So sad. Alright. But yeah, that was the Win USD position. This is a daily time frame. So this is a swing setup. Like I'm targeting crazy move in the market. So yeah, if I miss this opportunity, there are always other opportunities to enter. So basically, let me not scratch myself with that. Let me show you an example of fair value gap here. So remember, we said the fair value gap. We can spot the fair value gap. We first of all know the direction of the trend. This is the trend going downwards. No break of structures and the likes. Then you spot the imbalance. So here I can spot imbalance over here. This is it. Okay, this is the fair value gap over here. Let me zoom in so I can clearly see the chart. It's not necessarily on the daily time frame. You can see it on 1 hour, 4 hours, any time frame there. But higher time frame reduces the amount of fair value gap you see. If you go to lower time frame, you see a lot of them and it can confuse you. So yeah, this is where this fair value gap started from, and then the other parts is from here. On my shift tool and then draw it out. So basically, I can use this as my zone. You can see if I use the week and then expect price to come back here. Where is my short tool? Come back here and sell. My SL above the FVG and my TP targeting nearest liquidity. So this clear 1:3.5. Let's make it 1:4. This is it. But the market didn't trigger. So if you had held on to that FVG as your trading criteria, you have seen the market trigger later on, somewhere around here. Okay, later on somewhere around here. Remember, I'm looking for a buy position right now. Someone is using the fair value gap. We're seeking a sell position here. That's how crazy the market is. All right. Any strategy you're using, you see opportunities, but you can either win with the opportunity at that point in time or lose it out. So yeah, someone using sell opportunity here would have entered here for a sell with this fair value gap, and have targeted this liquidity over here, this same liquidity for his own 1:4 trade, and this is what the person will be waiting for. Okay, so this move will be like the indecision candles that I'm waiting to buy with and the person is waiting to sell with. So mine, observing that the market, this is the lowest market, my SL is beneath it. So no matter what, even the person takes his own profits, my trade will still be in progress, still holding till my TP emerges. That's literally a real-time example of the fair value gap. I'm going to give you guys an assignment because I can't leave you without an assignment. So go to your charts directly and spot out fair value gap. This is Win, this is Win USDT, but I want you guys to go to the BTC USDT chart. All right, you can use your Bybit chart or Binance chart, anyone you like on TradingView. If you don't have TradingView, check link inscription. You can get trade. You can get TradingView via the links in the description. All right, go there and learn how to spot them out. Just see for yourself how they play out. We believe this video has been impactful and you've gained a lot. Don't subscribe if you haven't. Turn on the notification bell so you can notify when I post the next video for educational purposes. Join our Telegram community so you can get setups and some trading updates. Like, subscribe, and join the farm. All right. See you next time, champs. Peace.